Welcome, everybody, to another episode of the CPA Advisory Show. I am your co-host, Chris Hervishon, along with my co-host, Jeremy Wells. Jeremy, how are you doing today?
I am doing great, Chris. Thanks. How are you?
Never better. Best day ever. And so let's jump right into it. Today, it's budget season, so we're going to talk about budgeting. Big day, I know. So, Jeremy, what do you do for your clients around budgeting?
Well, that's an interesting question, and I have a very uninteresting answer. I don't. It's a service that I include in the top tier of the general package that I offer, general set of packages that I offer to prospects. But unfortunately, no one's taken me up on that yet. So I have some ideas about budgeting, and I've definitely got some questions for you. But yeah, this was your idea, so I imagine you've got some things to say about it. So tell me, what does it look like to do budgeting for a client?
So first thing I think we need to level set on is whether we're talking about budgeting for a client's business or whether we're talking about budgeting for a client's personal life. So what we don't do is budgeting for a client's personal life. Generally, that work falls under a financial advisor, and we've got a couple that we work with. Well, I mean, one firm specifically that we work with, and we are happy to send that work out to them and have them deal with the personal stuff, the investments, and the financial planning, long-term plan, budgets, things like that, just on their own. And that's what we do. So what we do is budgeting for the business, and we start that in October-ish, and we go through two iterations. So we do a first blush by ourselves, and we say, this is what we think it's going to look like, and this is the jumping off point. We meet with the client, we walk them through it, get their feedback on assumptions, things like that, and then we do a second iteration, and then we basically lock it in for the following year.
Why October? What about October makes it to where this is the time to start doing this kind of work?
It's a good question. That's honestly just personal preference, right? I mean, you could do budget at any point. I mean, you could do a budget from July to June. You could budget, I don't know, September to August. So whatever time period, makes sense. And I'm sure that there are businesses out there where it makes sense to do a budget on some sort of a different fiscal year than as opposed to the calendar year. But just my experience being in corporate America, right around now is when we would start doing the budget for the following year. We work on a calendar year. We keep our clients on a calendar year, and it just seems to be what makes sense. Now, as far as why we started around October-ish, it's just a matter of how much time it takes to get in front of the client multiple times, for us internally to walk through many different budgets, because we're working on one for most of our clients. And, that's kind of just the timeline that we need in order to be able to lock it down by certainly, beginning of January, but, best case scenario, we're looking at mid to late December. We've got some holidays in there. People go on vacation, yada, yada, yada. So it takes a little bit of time, just from a logistical perspective, just to get in front of clients starting around this time of the year.
So it's about an 8 to 10 week process is what you're shooting for?
Roughly. Yeah, roughly. If we get it done in 8 to 10 weeks, I think we're doing pretty good.
Okay. All right. So you said there's two stages or aspects to this. So what do those look like? What's the first one? What's the second one?
Good question. And at the moment, anyway, the way that we're building our budgets is pretty much all Excel based. Now, if anybody who's listened to the show knows that we're a QuickBooks Online only shop. So where we start is with reporting out of QuickBooks Online, export it out into Excel, and then we basically work off of that. And then we get into a place where we can basically upload it into Excel as a budget. So most of the work on the back end is starting with, or is contained inside of Excel. Now, our methodology, and this is just our methodology, it's not the right way, it's not the wrong way, it's just a way, is that we basically start from the bottom up. So where we start is with expenses, and we will run an expenses by vendor report, take a look at all the different vendors, take a look at the timing throughout the course of the year. So we're running it by month. So if you kind of imagine what you'd see in QuickBooks Online or in Excel, you're running a report where on the left, in the left-hand column, you've got all of the different vendors, and then you've got all the different months for, let's just say 2022 in different columns. Then you've got a total. So now when we export that, we can kind of see the timing and the amounts for each vendor and how that kind of plays out. Export that into Excel. We map all the various vendors into GL accounts. So whatever GL account that they went to for the most part. And it, obviously sometimes there are multiple GL accounts for vendors. In that case, we'll just break it out. But that we're all accountants here. We can figure out how to do that. And we're just looking at the timing and the amount. And then we will extrapolate that into what we think it's going to be next year. So for instance, if there's an expense that's recurring every single month and it's a consistent amount, we would extrapolate that into next year. If there is a one-time expense and we're like, hey, there's like some sort of legal bill that was a one-off, we know that we're not going to have that in 2023 probably, and then we'll take that out. So we're making those judgment calls as we're kind of going line by line. We'll do a similar analysis for salaries. So who's currently working in the business? How much do they cost? What are the various things that go into making them a fully loaded employee? So fully loaded salary, and extrapolate out the timelines. We'll layer in some, timing assumptions if there's going to be a bonus paid at the end of the year, raises, those sorts of things. And, we haven't even gotten to the point where we're talking about new hires yet. So this is basically just taking what has happened historically. And then we get into the interesting part, which is revenue. And that's the hard part. And everything's really driven by revenue. So what do we think is going to happen? And, we're thinking about context. So how has the business done in the last year or two? What sort of environment are they operating in? What are they thinking about? And this is why it's so important to talk to our clients, throughout the course of the year, so we can kind of get that context, what they're thinking about, what they're planning for. So we'll either, a lot of our clients are project based. We've got some that are what I'll call subscription or retainer based. And then we've got others where they're fairly new, and then that becomes tricky. So in the instances where clients are young in their life cycle, maybe they don't have any sort of a CRM or pipeline tracking or anything like that, the best we can really do is some sort of a regression analysis. And those are just straight Excel formulas that we use, or at least as a starting point. So that's one. If they do have a CRM, if they are tracking pipeline, then obviously we're going to use that data as a baseline. If they are a subscription-based business that's relatively stable, like my business is a really great example of that. Forecasting our revenue is pretty easy. Like we know what clients we have, and we know what we're going to plan as far as bringing on new clients and things like that. It's fairly straightforward. But revenue is really the hard part. And then we roll all that up into a P&L. So anything that's cost of sales, cost of goods sold, whatever you want to call it, we're just taking those as a percentage of whatever they were last year. Obviously, we can toggle that a little bit if we think that the assumptions are going to change. So taking that as a percentage of revenue, and then all the fixed expenses, overhead type stuff, payroll, those are all coming from the analysis that we did on those other schedules. So just basically rolling that all up to a P&L, figuring out what that means from a cash flow perspective, figuring out what that means from a cash reserve build or spend analysis, and then presenting that to the client and just talking through all the assumptions that we made, how we arrived at what we arrived at, asking questions, lots and lots of questions, always a good thing. And then we arrive at the second iteration let the client marinate on that for a little bit. And then once they say, yeah, it's good, then we load that into QuickBooks. And now we have something that we can track against. And that was a word salad.
Yeah. Well, I was going to ask you about that. That was the first thing that struck me, because I know from my own experience of dabbling in some of the more advanced tools that we get access to as accountants in QuickBooks Online that aren't necessarily, especially the ones that aren't necessarily available at the lower subscription tiers. One of them is a budget tool. And I've gone through in my own firm. I mean, this was a couple of years ago when I had a little bit of time to spare to play around with tools. But I played around with just kind of building in a couple of assumptions and planning things out. And it's mostly just month over month is pretty steady based on the last couple months, right? So how useful is that tool? So if I'm looking to add this as a service that a client actually does sign up for, how useful is the budget tool in QBO versus do I need to do something manual in Excel, or are there other tools out there, other SaaS products or something like that would, maybe automate some of this process? Because it sounds like a lot of work, especially for the first time going through it. Now, and I say that, and probably the first time you need to do it very manually to understand the nuts and bolts of what's happening before you figure out something that's automated. So I guess let's think about this through the process of your own internal learning within the firm, right? So like, let's say you've done a couple of these where you've done it very manually in Excel. You've learned the nuts and bolts. You've figured out some of those assumptions. Maybe you've set some benchmarks, that kind of thing. And so now you're looking for a way to scale this part of your practice. Where do you go from there?
Such a good question. This is just my opinion, but as far as the budget tool inside of QBO, I think that it's really good for a very simple, stable business. So basically, you can just take last year, copy it forward. It looks the same as last year, and you can make some, I don't know, adjustments. We'll call them, right. So this month, I think that bonuses are going to be whatever. Or this month, I think that software is going to be whatever, and it's very simple, it's fairly high level, but that's probably going to be good enough for a lot of businesses. And most of the businesses that we've worked with, when they come to us, like, they've never done a budget ever. So going from, this isn't one of those things where you need to go from 0 to 10 right out of the gate. You can help move that business forward by going from basically 0 to 1, just having anything, and helping them think through what a plan is going to be for their next, whatever, 6, 12 months. So that's a good place to start, I think. I think that having that budget tool in there is good to have data into it. And basically, our process, where that varies from just using the budget tool exclusively, is that we look at things a little bit more granular. So that we're looking at it by vendor, and we're really doing that bottom up approach, getting down to the lowest level of detail that we can. Because I don't know, maybe I'm just anal, but I've just kind of like that approach. So, and then being able to feed that data into the budget tool, so then we can do some reporting. So do some budget versus actuals reporting, and we can have various iterations and things like that. So I think that that's a good thing. Now, is that terribly scalable? To your point, probably not. It takes, staff who has experience with it, or have a really good process in place. Certainly it takes having knowledge of the context of the business that you're analyzing at that particular point. So, there's a little bit of skill that goes into it. Yes, there are products out there. One of the ones I'll tell you that we're looking at right now is Giraffe. So historically, we've been in Google Data Studio. We were in Power BI before that to do our financial reporting. We're looking at moving to Giraffe now because we can do a little bit more advanced forecasting than what we've been able to build out, which is somewhat manual. And being able to contain the budget there, contain the forecast there, that's kind of appealing to us. But we're in early stages right now, so there are products out there, Draft being one of them, and probably the one that's most front and center as far as the CPA community right now. But yeah, there's definitely tools out there apart from the QBO budget tool.
Yeah. So, and a couple of terms that you've used and I've heard used, and some of the things that you were talking about through that process that all seem to kind of run together. So, budgeting is what we're talking about here versus forecasting, which I've seen those two, when we're talking about CAS, client accounting services, or client advisory services, whichever we want to call it, right? Those two always seem to, they're like peas in a pod. They always seem to be, it's always budgeting / forecasting, right? As if these two things are different, but they go together, right? But we're specifically talking about budgeting. And then another one, because you mentioned looking at salaries, looking at employees, another one is capacity planning that goes along with that. So are you differentiating, since in this episode we're specifically talking about budgeting, within your own practice and the way you're thinking about these services and the way you're thinking about selling them to clients? Are you differentiating between budgeting, forecasting, capacity planning? Are you doing this sort of all in one fell swoop? Like what is the difference there as far as you're concerned? And or does the difference matter?
I think the difference definitely matters. Budgeting is a plan, just a plan, right? Forecast is what we think is going to happen. And I think it's important to look at budget, forecast, and actuals. Those are 3 different tracks, if you will. I think it's important to look at them all together and to get the context together at the same time. So in other words, we put a plan together. It's whatever, October of 2022. We're putting together a 2023 plan. And like, who knows what tomorrow is going to look like, let alone from 12 months from now. But we're taking our best guess based on the things that we know, and we're putting together a plan. So for the plan, as we track throughout the year, we can ask questions. Well, we thought that this was going to happen. It hasn't. What does that mean? Right. So that's budget versus actuals. And then we also have the forecast, which is what we think is going to happen going forward. So, okay, the forecast says that this is what's going to happen going forward. This is how it's going to diverge from the budget. So having that data point and then asking the questions that go along with that is important. and then taking that within the context of actuals and going through that same process. I think that that's important. And really, it's all about financial strategy, and strategy is really all about questions. What questions can we ask, and how informed can we make those? So I think that all of those things together are important. Now, when it comes to capacity planning, I that gets to what we call coherence, and coherence shows itself in um, the people and the workforce that's going to be inside of the business. So if we say that we're going to grow 2x, do we have the people in place to make that happen and to allow that to happen, and for us to do good work to support that? And if you don't, then obviously you're going to need to hire. And then the next question is, well, who do we have to hire? How much are they going to cost? That sort of thing. So doing that in the scope of the budget is definitely important. Having that in the forecast is important too. So we're doing that no matter what. And that's kind of the way that we think about it. So coherence from a capacity planning perspective is something that we take great importance to. And then coherence from a marketing and advertising budget perspective is something that we look at too. Because if you tell me that you're going to grow revenue 2x next year, or 3x, or we've heard some crazy numbers. Like, okay, well, 10x. I heard that one yesterday. Okay, like that's cool, but what are you going to do to grow revenue 10x? And if it's just a hope and a prayer, or if it's just organic Google search, like, okay, then like you're just basing your strategy on hope at that point, and that's not actually a strategy. You need to put some marketing and some advertising budget and some sales budget behind that. And so, what does that look like? And then how does that how does that feed down to the bottom line? Is that enough? Is it, you know, is it adequate? Is it inadequate? Okay, if it's inadequate, then we got to start changing assumptions. We need to change where we're going to be spending our money. We need to change our revenue assumptions. And if it's adequate, okay, cool. Now we can move forward. But everything needs to be coherent, and you need to all talk to each other. You have to have the right people in place to support what you're planning to do in the business. You have to have the right advertising budget, all of those things.
And asking those questions is important because not just asking the questions, but thinking about why we're focusing on those particular things. So in a previous episode, we talked about, for example, measuring efficiency versus effectiveness within the accounting firm, right? And that gets
Mm-hmm.
at what are we actually measuring? Why are we measuring that? Why, what about our firm do we want to change or improve? And that relates back to what we're actually measuring. Are we measuring this just because it's easy, or are we measuring this because it's actually the thing we want to improve, or that it's actually indicating the thing we want to improve? And I see this a lot with business owners and clients that I'm advising, is a lot of the sort of public imagery that gets put out there is defined in terms of revenue, right? MRR or ARR, right? And so we've got this amazing ARR, or this ridiculous growth in ARR, but what is that actually translating to in the bottom line, right? So if you're pumping a whole bunch of ad spend into 5xing or 10xing your revenue, but the bottom line is getting weaker and weaker because it's costing you so much to do that, right? And so this looks like the problem of unplanned growth, right? And what I'm hearing is that the forecasting, or the hoping, right, that will 10x revenue without an actual plan might lead you to a bottom line that is making you somehow worse off, right, than you would have been. Or maybe
Sure.
you're having to borrow a lot to drive the ad spend to 10x the revenue, and so now you've got weaker leverage because you didn't think about the balance sheet while you were going through this process of trying to boost your numbers on the P&L, right? And
Mm-hmm.
it seems like the budget is the thing that kind of pulls you back to reality and says, okay, that's great that we want to make these changes and these improvements in terms of top line revenue, but what is this actually going to do to our business in terms of profitability and value over time?
Yeah. What does this look like? Like, okay, we're going to 10x revenue, but you're going to need, I don't know, 3 or 4x the number of employees. Do you want to manage a workforce that size? It's questions like that. And to your point, bringing the balance sheet into it, super critical. Like, what is this going to do to debt? What is this going to do to a line of credit? Obviously we want to be hiring capacity before we need it, as opposed to when we absolutely need it, because that brings a whole host of other problems. All right, well, maybe when we're needing to hire these people because of when we're increasing revenue, then maybe that's not going to translate into enough cash flow. Maybe we have to tap the line of credit. Is the line of credit big enough in order to support that? Do we need to go get a bigger line of credit so that, those sorts of things? But you have to take the balance sheet into consideration. That's super important.
Yeah. Yeah. So I think the gist over just here then when we're thinking about these three different parts to it, right? The budget versus the forecast versus the actual gets at just your conception of probabilities, of likelihoods, of ranges, right? Because we can say that we want a 10x revenue, but what happens if we only 5x revenue? What happens if we actually 12x revenue, right? And so what's going to happen within these different ranges? So when you're thinking about creating the budget and you're thinking about how do we actually what percentage month over month change or year over year change do we see, where does that come from in terms of the way you're thinking about probabilities, estimates, risks, and on a spectrum maybe of say, these are really conservative estimates. We're looking at history, and history says we might double our revenue year over year and therefore double our cost of goods year over year. But let's be a little conservative. Let's say we're only going to 1.5x revenue just to be on the conservative side versus let's just get really aspirational, right? And let's say we 5x or 8x or 10x revenue. So are you creating separate budgets as sort of a scenario planning, or do you just wind up on one budget that's somewhere in the middle, or where do you go in terms of balancing out hopes and dreams and aspirations versus trying to be what we're trained to be as accountants, which is professionally skeptical and conservative?
Yeah, so we only create one version of the budget, and the budget's the plan. So if the plan is being done in October, and then we get into January, that means we just did the planning 2 months ago, and a lot of things can happen in 2 months, right? Now we're in June of the following year, and we created the plan 8 months ago, and a lot of things can happen in 8 months. So the world might look totally different. But I think to your point, this is why forecasting becomes really, really important. So we had a plan. The plan is probably not going to happen in some way, shape, or form. Either we're going to way outperform, we're going to underperform, we're going to way underperform something. Like we're just the plan, unless you have a super stable business, super predictable, which aren't a ton of businesses nowadays. I mean, the budget is going to become less and less relevant as you go throughout the year because it's just a plan and it's going to get stale. That's why you have to do the forecast. Now, if you do the forecast and you see, all right, well, the plan was to hire 3 people last month, but in reality, we're way ahead. We're way outperforming. We're way ahead of where we thought we were going to be. We got to hire 6 more. The forecast will tell you that, right? The forecast will help to identify that. The forecast will help you to identify what you need based on what you are seeing right now, which may or may not diverge from what the budget was, right? So that's why that forecasting piece is so important, is because it takes you from where you are forward, and it's going to be much less stale, obviously, than what the budget is saying as you go through time.
Yeah, this is reminding me of the quote that I think it's apocryphal, but it gets attributed to Dwight Eisenhower, that plans are worthless, but planning is everything, right? And so it's that process of sort of setting your target in the budget, or thinking, right, like this is our agreed upon idea of what's going to happen in the next year, but then once we have that, the job isn't done, right? We need to be going back to that and seeing what's actually uh, what actual is compared to the budget, and then based on actual versus budget, be looking at what's going to happen over the next month, next 3 months, next 6 months, however far out you want to forecast.
Yep. You can take that back to the Mike Tyson quote, too. Like, everybody's got a plan until they get punched in the face. Same deal.
Right.
Same deal. But that gives you a tool as an advisor to say, to go back to your client and say, okay, well, this is what's in the budget. And obviously, like, you've got to use some discretion here as far as when this is an appropriate question to ask and what the situation is. But this is what we said was going to happen in the budget. This was the plan. We have diverged from the plan. What's going on? Do we need to go back to the budget and revisit the budget, or maybe you're basing it off of a forecast now, or like whatever. But you've got to use some discretion there. But it gives you a tool at least to go back, and revisit the conversation that you had previously when you were putting the plan together.
Would you revise a budget? Like if you got into it, let's say you do get into April, May, June, and something just unthinkable has happened, like a global pandemic, or springs up in February or March, right? Or just something crazy like that happens. That would you go back and revisit the budget, or like what do those conversations look like from a practical standpoint? Because I think part of what I would try to wrap my head around is, spending 8, 10 weeks working with a client to set up this budget and seeing that as some sort of deliverable or value add or something, some sort of, generation of value for the client that is now numbers on a page. And from that point on, what I'm hearing is, we worked really hard on this, but it's wrong, right? Like we know it's going to be wrong because real life is not going to follow the plan. So, is there any sort of way to redeem some of that original value, or is it just to the point at which we just need to pick up with the forecasting and keep going on?
Yeah, I mean, you could always put together another budget that's some sort of a fiscal year budget and say, well, this is the plan for the next 12 months. Personally, I wouldn't. I mean, because at some point you're getting into back into the budget cycle where we're going to start this again in October anyway. And, when you're maybe like when you're in that June to October no man's land, like, it just is what it is. And what I would do personally is I would rely more on the forecast at that point. I would be relying on the forecast to tell us what we're expecting to happen and how we need to plan for it going forward. And then you get into another budget season and, so on the cycle continues.
So is yearly always the right cadence for this, or would there be a case where maybe more frequent or less frequent sort of budgeting would make sense? Because like you said, if the business is relatively stable and maybe you've got an owner who is more interested in building a lifestyle business as opposed to something that's going to scale, right? Maybe we're looking 2 or 3 years down the road instead of every 6 months to a year down the road or something like that. Or maybe on the other hand, you've got an almost hyperactive owner who wants to scale the business 10x, right? And so they're wanting to plan out the next 3 months, not the next 12 months. Is annual the right cadence here? Have you had to talk owners out of a different cadence that maybe they thought was more appropriate, or would you go along with that? How would you handle that sort of time frame aspect of the budget?
Yeah, that's a good one. We haven't dealt with that one yet. I could see I could see it coming though, for sure. I think that you need a long enough period of time where you get a big enough sample size to judge how the business is performing relative to whatever the strategy is. Yeah, I mean, you could do monthly budgets, like I suppose if you really wanted to, but that's one of those things where you need to say to the client, well, I can do all this work for you, but it's going to be pretty expensive and it may or may not be relevant, right?
Yeah.
And we're gonna have to do it again next month, and that sort of thing. I mean, I guess you could do that. I don't personally see the value in it. I do see the value in the forecast, doing the monthly forecast and then tracking it against the budget, for sure. But again, like in our experience, what we've seen is this is an exercise mostly of moving clients from 0 to 1, as opposed to 0 to 20, which is what like a short-term budget on a continuous basis would be. It's really about moving from 0 to 1, and there's a lot of value in just sitting down with a client and just saying, hey, what do we think is going to happen? Let's put together a plan, which is really all the budgeting is, right? Because most business owners have never gone through that. I mean, everybody who's probably listening to this knows most business owners are flying by the seat of their pants. Just ask yourself, or ask your clients, how many clients actually have a business plan? I think I've got one, maybe two, maybe. I don't know. It's not very many, right? But it's the same type deal. But just telling a client like, hey, we're going to do a budget. We're going to do it every year. We're going to sit down. We're going to go through 2 iterations. We're going to think about this. We're going to do it in a thoughtful way. We're going to ask a whole bunch of questions, and we're really going to put something together that's a coherent plan. That's how you're moving your clients from 0 to 1, or 0 to 7 or 8, or whatever it's going to be at that point.
Business plan. I'm lucky if they can send me an operating agreement, much less a business plan.
Yeah. How many of your clients? Ask yourself, how many of your clients don't have operating agreements? And if they do, maybe they do. How many of your clients can find the operating agreement in their files?
That's a whole other episode, maybe a series of episodes on those sort of basic incorporation documents. But yeah, I can see where very quickly it would be easy, because I'm thinking in terms of the sort of almost like a food chain of, these are the things that you really need in place that on one hand, they're the trappings of business. I was listening to a podcast episode earlier today about whether having values and a mission statement, all these kinds of things within your business, whether that's just whether that's actually relevant and valuable to your business, right? Because other than making money, right, what do we really care about in our business? But then the point was that maybe there is something to, especially as your business grows, right? Especially as you bring on more employees, this kind of thing, having this set of documented ideals, or some sort of framework within which we operate, right? Amazon's a great example. Amazon has the different leadership mantras, and then they've got the 6-pager rules, the no PowerPoint rule, all these different things that it comes out of Amazon. And we've got tons of blog posts and podcast episodes that will attribute a lot of Amazon's success to these kinds of early rules that were put into place. And then maybe we need to be emulating some of this in our own small businesses, whether it's our firms or our clients' businesses, as sort of a way of not necessarily just putting the trappings of running a business into place, but actually, changing our mindset to where we're not just here trying to make money and, trying to fund our personal lives, in a slightly tax advantaged way, but like we're actually building a business here, right? Something that is built to last, maybe built to sell, whatever. Right, something that's going to really improve the lives of the stakeholders involved. And so, I think in terms of this sort of ordering principle, having that operating agreement in place so the owners are on the same page as far as, this is how we'll make the big decisions. This is who owns what. This is who can veto, and who can't, those kinds of things. And then maybe from that, breaking it down into, more of your almost like a set of bylaws, right? This is how we'll do day-to-day sort of decisions. And then, something along the lines of what you're saying with a business plan, right? This is overall what we're trying to achieve. This is our mission statement. These are our values. And then from there, it seems like it would be very natural to just sort of flow into this yearly cadence, right? Of maybe we're going to go back and review and revisit and update the business plan. We're going to create a new budget. We're going to evaluate service lines as to whether they still fit within the mission, whether they are having a net positive effect on profitability, on cash flow, these kinds of things. And so a lot of that process of creating the budget would have these sort of spillover effects beyond just, we're creating this financial plan and then hoping that it actually, we can get close to it next year. But rather we're having these spillover effects of, we're improving the business overall because we're just having the conversation in the first place. And I think there's a lot of connection between that and, thinking about personal budgeting, especially within the family. I know my wife and I, we'd been married a couple years at that point. When we really started getting serious about finances and budgeting, and just having to have that occasional meeting where she and I sat down and looked over the checking account statement and looked over our budget, just the conversations that would emanate from that went way beyond just what do we want to spend our money on, right? What do we actually value? What are we trying to accomplish here? And I think there's a lot of value add there beyond just, oh, now we have a budget. Let's go try to carry it out.
Yeah, sure. What we see with our clients is the ones who are most successful are the ones who are most organized and most engaged. And putting together a budget is one of those things that kind of is going to accomplish both. Like, do you have an operating agreement? Do you have a business plan? Do you have a budget? Are you cash flow forecasting? Like, you can make money any number of ways. I mean, people like somebody had the idea to just bottle water. Right. I mean, like the pet rock was a thing. Like, you can make money any number of ways in spite of yourself, but you have to be organized. You have to be engaged. So, that the budget's one of those things that really helps with that. So with all that said, we've gone through kind of the way that we think about the budget, what it is, that sort of thing. Jeremy, I'm kind of curious, how would you charge money for this?
Yeah. And I was just thinking about that because, through that last little bit of the conversation, there's obviously a significant investment of both your expertise, right? Because, as you're going through this budgeting process, you're thinking about how money works, how business works, how the process of forecasting the different lines of the budget is going to work. And then, also connecting with your client in terms of, what they care about, what they're hoping for. And so there's going to be a lot of time going into that as well. Now, We had our
So are you
episode.
billing by the
Well,
hour?
I was about to say we had our episode with Ed Class, right? And the pure number of minutes or hours that you're spending on this is not the point, right? But it is a lot of investment in different ways into what will eventually be that final product, both for you and for the client, right? Because this isn't something you could just do on your own. This is not like a tax return where it's like once you've got the documents in place, you just go do the tax return, right? This is not them just giving you a bunch of raw data and now it's up to you to put all this together for them, right? This is I'm imagining this is an iterative process and one that's really involved for both sides of this, right? Like they're coming to you, you're coming back to them, and it's going back and forth. There's probably some drafts involved here, multiple questions, follow-up questions, this kind of thing. So in terms of thinking about pricing this out, I don't like thinking about pricing individual services. So I wouldn't sit here and try to say like, you know, this is how much I would charge you to do a budget, right? Because this isn't something I would want to do as a one-off project with a client. I'm not going to have the sort of institutional understanding of you and your business. I'm not necessarily going to have the ability to think about the benchmarking for your industry and all this sort of stuff. So this would be something that I would, this is a fairly advanced level of client services, right? And so this is something that I would want to feel comfortable in your niche. I would want to feel comfortable working with you as a client, you and your business as a client. I would want to have a solid understanding of your business and its operations, which is probably going to come from having done the accounting work. If I'm not actually doing the accounting work, I'm familiar with who is, and therefore I trust their work, right? These kinds of things. And so it would be really difficult to think about pricing this as a one-off thing, and rather thinking about how this is going to fit into the overall value, of our relationship. So I don't know how you would do this any other way besides, some sort of value pricing arrangement. But then again, I don't try to think about pricing any other way than value pricing. So I don't know. I could be wrong there, right? Maybe this is something if you're not opposed to time-based billing because of the investment, right? And if that's something that you actually do, I could see where that would make sense. You're thinking about this purely in terms of this is going to take a lot of time, right? There's going to be a lot of meeting time, a lot of back and forth time with the client. So I am going to have to track the hours and set a decent hourly rate for this kind of work because it's some advanced kind of work. But yeah, as far as I go, this would definitely be a top tier of what I offer. This would be included in that, but it's not something I do at a lower tier, and it's probably not something I would do if we didn't have a pretty substantial relationship already.
Yeah, and you raised some interesting points. Now, you could definitely bill this by the hour. Not that we do. What I'm hearing is that you don't.
I do not,
Hopefully, most
and I
other
wouldn't
accountants
recommend it
are.
either, right? Because yeah, I
Yeah,
don't this isn't even something that you're filing on behalf of your client, right? Like this is not something that your client is going to get and see. I don't think they would see a lot of tangible value in this, like the same way they would a true deliverable like a tax return, right? But then again, it is something that the process itself, both for the client, especially if there are multiple owners in that business, and this is or maybe you've got people at the executive or managerial level who aren't necessarily owners, but they're still involved in the budgeting process. This could be a real like almost a team building activity, right? With you involved as well.
okay. So let me think out loud about this with you here for a minute. Now, the way that we do budgeting, the way that I described at the beginning of the episode, I don't know, maybe 4 to 6 hours, somewhere in that neighborhood. So, most CPAs could probably charge anywhere from what $1,000 to $3,000 to do it, something like that. If you were charging by the hour, I'm not saying that you should, but if you were, okay. Now the way that we do it is we lump it into our subscription based service because, to your point, we're doing the accounting, we know the numbers, we can trust our numbers to do this and do it well. The way that we do it, we've got to have that granularity. So we need to know that every expense has a vendor associated with it. We need to know, we need to have access to the payroll data, that sort of thing. And we need to have context too. Context is super important. And we get that context throughout the year because we're having conversations with our clients. So, we wrap it into a subscription based service. Now, if you're trying to value bill this, not value bill, value price, because I think I just saw your head explode. So if you're going to value price this, right? I think it's actually kind of easy, and here's why. Let's just say that you've got a business that is doing $1 million in revenue, and let's just say you've looked at the books and you have just a good idea, like, or maybe you've done some benchmarking. You see like this business is struggling in these areas and they're under the industry benchmark. I mean, you could say to that client, well, if I give you a roadmap, not even saying that you have to execute it, not even saying that this is definitely going to happen, but if I gave you a roadmap to increase your bottom line by 2%, that's worth 20,000 bucks. And so now you can kind of do this value analysis. Like, all right, well, I'm going to charge you $2,000 to do it. It's going to take you 4 to 6 hours, maybe. Um, you're going to get I'll give you a roadmap to a 10x ROI. That becomes fairly compelling. So I think you can do it any which way. You can do it by the hour, you can do it value, and then you can do it subscription.
And I like that because I think too often as accountants we're thinking in terms of the sort of technical conceptual labels and meanings of what we're doing, instead of thinking about what is this actually doing for the client, right? A budget is a budget. A budget is just a sheet of paper with a bunch of numbers, on it. And those numbers have some relationships, sure, right? But if there's no context, if you just pick up this sheet of paper that's got a bunch of numbers on it, you wouldn't know that from a phone book, right? But the fact
Yeah.
that you're within the context of saying, all right, I know about this business. I know about the owner's goals and hopes for this business. I know about the fact that there's some historical data in here mixed along with some forecasting and educated guesses and benchmarking, all this kind of stuff. Okay, now I understand what this document is. And the point is not to just be a budget. The point is to give the owners some direction, and maybe the executives and managers, if they're not owners, some direction in where this business wants to go and needs to go over the next 6, 12, 18 months, however long your time frame is. And so, calling this a roadmap, right? And giving it some sort of actual tangible result, and like you said, ROI to the owners. I think that might be the way to not only wrap your head around it yourself, but also help your prospects and clients wrap their heads around it, because you're not selling them a budget, right? Like you said, you're selling them a plan to, double their profit over the next, whatever time frame, right? And now you might be freaking out a little bit and saying, well, I can't guarantee that, right? Like, that's not up to me. Yeah, but you're not selling them the actual doubling their profit. You're selling them a plan to get there. And again, the plan might work, it might not work. That's part of, being an advisor, is sometimes our advice isn't exactly right. But that just goes along with the territory. And so you have to start allowing for some margin for error in what you're trying to help your clients achieve, and at the same time realize that you're generating value in other ways. You're not generating value by having this exactly correct plan for how they're going to double their profit. You're generating value by giving them the expertise that they need to make the right decisions to get their businesses going in that direction. And so I think calling it something like a roadmap, a roadmap to double your profit, in 12 months or 24 months, I think that's a much better and much more relatable way of thinking about it to a business owner than calling it a budget.
Yeah, and what's interesting, when you were kind of just going through that for the last minute or so, you touched on some interesting concepts from prior episodes, and one of them that you touched on was do care, which is something that Ed touched on quite a bit. Like, do the things that you're good at, right? Make sure that you're capable of doing the thing that you say that you're going to do. So that's one. And then a combination of what Shannon talked about and what Ed talked about. So Ed framed it as linguistics. But what Shannon talked about, if you remember, in the context of the newsletter, like, nobody wants another newsletter. And one of the things that she said was, why do we have to call it a newsletter? Well, why do we have to call it a budget? We don't. It's just like, that's industry parlance. Like, nobody cares about a budget. What they care about is the roadmap. They care about the plan. They care about how do you get from here to there, and there is where we want to go. So what does that look like? Now, you can probably charge a lot of money for that roadmap, but you probably can't charge a lot of money if you just go into QuickBooks and click next cell and just copy and drag 2021 into 2022 or 2022 into 2023, and then just say, here's your budget, right? There's no expertise that went in there. You probably didn't build a value with the client. You probably didn't have that back and forth conversation. You didn't ask about context. You didn't ask any questions. They didn't ask you any questions. You just kind of went in there and did it. So you really need to build that roadmap in a way that's thoughtful and that is transferring your expertise and your knowledge to the client.
And this has got me thinking. Yes, there's definitely some episodes that we've got this. So really, the takeaway here is as we now that I have this much better understanding of what providing a business budget, right, or roadmap, or whatever we're going to wind up calling this is. One, I think you can relatively easily. Once you've got the ball rolling on this, once you've done it for a handful of clients and you've gotten a grasp of what the client is actually looking for, what you can actually put into this, you can relatively easily productize this into maybe even something that is not necessarily standalone in the sense that you're doing these one off for anybody and everybody, but you've got what Gino Wickman and Traction calls a unique process, right? You have this proven process for how you can create this roadmap to the point at which if you've got the right inputs and you trust the data, then relatively quickly, and not just you, but staff that you've trained can take those inputs, run them through this process, and now you have this roadmap that maybe even within, let's say, a month rather than 8 to 10 weeks, right? You can turn around and then schedule that. So when the client signs up for this service, let's say you've sold it to them on October 1st, maybe by November 1st, right? They've scheduled a call with you where you sit down and you take 90 minutes because you've got the inputs, you've gotten the information you needed from them. Maybe you had a sort of kickoff call in that first week of October, right? To where you really clarified some things about the information they sent you, or maybe they plugged you into their QBO. And so you've gotten the raw data you need. They plugged you into their payment processor like Stripe. They plugged you into their payroll service like Gusto. And so you've got the raw data you need. Now it's just clarifying a few of the assumptions with ownership. And then it's just a matter of plugging that data into the right places and being able to turn around and offer that, something that you could make from a template that looks professional, that really has a sort of good deliverable feel to it, if that's important to you. Or maybe you just skip all of that and you say the actual call, the follow-up call, a month out, 6 weeks out, however long, that is it. And instead of worrying about the budget, right, the page with a bunch of numbers on it, instead you're showing up and you're giving some off the cuff recommendations, or maybe the owner's concerns over the last month have changed, and so now you're updating those recommendations based on how their concerns have changed. This is something that could go a lot of different directions, and I really like the way this has gone, where instead of just saying, well, we're just selling an annual budget, right, this is now something that you could really turn into a special, unique, differentiated offering you've got inside your own firm.
Yeah, agreed. And you can do this around special circumstances as well. If you're calling it a plan or a roadmap, like here's your recession roadmap or whatever, and provide that context around the broader economy, or maybe even just some industry conditions that are existing for whatever your target niche is at the time.
Absolutely,
So
right.
there's
Like
that.
you've got the
Yeah.
roadmap for whatever that specific niche is. Yeah, I think that's a great idea.
Yep. And I'll just say, like, from our context, inside of my firm, and based on our process, like, we did an internal training. It took about 45 minutes. We recorded it, put it out in our shared Dropbox, and everybody's got access to it. I think if you've got staff who's got 2 years of experience, maybe 1 year of experience, somewhere in there, like, they can certainly put together the first draft of a budget based on clear guidelines, and then you've got something to work with. So I don't think it's something that takes an incredible amount of expertise. Having the conversations with the clients, that's where the expertise really comes in, and knowing how to navigate that. But as far as the first draft, just getting something down, I think somebody with relatively little experience is was able to do
And
that.
this is how you bust out of that Ponzi scheme that Michael Mayhouse was talking about, right? This is how you get,
Functional Ponzi
yeah,
scheme.
right. This is how you get those first, second for sure, maybe even first year associates out of the trap of just doing menial labor and actually get them doing real advisory work without putting them right in front of a big client on in their first year of the job, right? But you get them involved in real advisory work, not just paperwork, right? And so now they're involved in the process of helping create a budget, which is a relatively high level CFO advisory service, but they're doing it in a structured way where they're learning something that they're going to need to be doing when they're fourth, fifth, sixth year seniors, managers, whatever. But it is not. It is in a very controlled way. And I think the more ways you find in your firm to get younger or newer, not necessarily younger, but newer staff involved in these higher level, higher value advisory work, the higher your retention is going to be, the easier it is for them to want to stay instead of going and finding offers elsewhere where they're being offered
Mm-hmm.
those kinds of opportunities or going out on their own, right? So if you're worried about staff retention, I think finding these sort of advanced services and instead of them keeping them at the partner level, right, finding ways that you get your newer staff involved in them as well. And I think this would be a great way to get them involved in a great entry level way to get them involved in some of this CFO work.
For sure. So, and it's a great thing for client retention as well,
Absolutely.
because now you're the partner.
Yeah.
So we have covered a lot of ground in this episode on budgeting, which is a non-sexy topic. Which
I did not expect this.
Sexy
I
topic.
did not expect this, man. I seriously thought, oh, budgeting, who cares, right? But
Yeah, well.
oh, you spent too much on advertising again. Well, that's a bummer, I think in a very similar way to a personal budget, right? People think, business budget, that's just going to be a downer, right? It's just going to tell me I spent too much money on everything. Well, yeah, maybe.
Mm-hmm. Yeah, for sure. It's as interesting as you want to make it, put it that way. So, Jeremy, we're up against time. What are the key takeaways from the episode? And go ahead and take us out.
Yeah, I think number one for me was the plan or budget versus forecast versus actual, and distinguishing those three things and making those distinctions clear, but then also finding the relationships between them. And that is a big one for me. So thinking about budgeting versus forecasting versus capacity planning versus actual, and how these are for interrelated but separate sort of things. The second one, I really like that term you use, coherence, right? So, as we're thinking about these separate services, finding the interrelations and making sure that we are keeping them coherent. And then third, that last little bit of, taking this just, really not sexy topic of a budget and turning this into something that, a process and a productized service that would get you, your staff, and your clients really fired up, right? Looking forward to October or early November, whenever you're going to start this process, as opposed to just kind of dreading, your next budget review. Nobody wants to go through a budget review, but man, if you're going to lay out a roadmap to where I can double my profit next year, I'll schedule a 90-minute call with you for that, for sure.
Very cool. Love that.
Very cool. Good deal, Chris. Well, thanks for the education. You've definitely given me some ideas here that I'm going to go try to implement into my own firm. But for sure, definitely looking forward to thinking about budgeting more and how to make that a little bit more sexy. Yeah. And good deal. Hey, it's Jeremy. Thanks for watching the CPA Advisory Show here on YouTube. If you enjoyed this episode, please subscribe, like, and leave us a comment. We'll probably read your comment on the air. Be sure to follow us on Twitter at CPA Advisory Show. And if you have an idea for a topic or guest you'd like to see, email us at host@cpaadvisoryshow.com. Thanks for watching, and we'll see you next time.